Can you help us understand how DBS was able to use this noise, perhaps, to actually come out with this impressive set of quarterly results? Or was this just a matter of being prepared to ride out some of these uncertainties?
Well, I think the great results are a function of things we've been doing over the years. Structural transformation over the decade, the building of a very solid liability book, our transnational business, wealth businesses, all of those kicked in really impressively in a rising interest rate environment, as you clearly pointed out. The noise I was alluding to was really some things that cloud some of our underlying performance in the fourth quarter. So, for example, our loans actually came off in the quarter, which is unusual. And that's because it's a short-term aberration. A lot of people are paying down opportunistic loans they had taken because the high interest rate environment means it's not sensible for them to keep the loans on their books. But that's a 2-3 month phenomenon. That's already winding off. Similarly, on wealth management, a lot of people are not doing margin financing, not putting money to work. But if you look at the underlying, it's quite clear that Singapore and DBS has benefited a lot from an inflow of money. Net new money was the strongest we've seen at $24 billion. And therefore, we do think there's a capacity for us to help people to put the money to work in the coming months and quarters. So if you look through the noise, we think there's some upsides which are going to come through in the later part of this year.
Now, despite the noise, the clear theme, perhaps even for 2022, Piyush, was net interest margins really improving and giving a lot of banks like yourself a huge sigh of relief, also on the back of this rising rate environment. But we are seeing the rate hiking cycle perhaps starting to ease, and DBS also has issued perhaps a peak NIM outlook actually for this year. The question is, given how well it's done, is this as good as it's going to get for net interest margins for DBS? And moving forward, if this engine is starting to perhaps slow down, what are the new growth areas for growth for 2023 that DBS will be looking to tap on to sustain the strong outlook and these strong results?
Well, first of all, I do think there is more upside on NIMs from where we are. I do think even the peak NIM that we've guided for now, while a few basis points lower than our previous estimate, is still up from where we are today. But the more important thing to think about is on a full year-on-year basis. Our overall NIMs for this last year averaged 175. And there's no question that our NIMs for next year or for 2023 will be another 30-odd basis points or more north of that. And therefore, the overall returns outlook and the profitability outlook for the bank in 2023 will actually be very good, notwithstanding the slowing down in the interest rate cycle. The upside, though, really will come from the fact that the economies are beginning to open up in this part of the world. The U.S. is not, today looks like it might not go into recession. So we're now calling almost a 1% point growth there. We think the Europe as well might not get into negative territory. But most important, we think China's earlier than expected opening up is going to be beneficial to our part of the world. So we are beginning to see business volumes pick up on the back of that.